If you want awesome products at great prices, check out the in the description. Boeing's shadow over the Pacific, a trade war's toll on aviation's giant. The skies above Seattle held a silent drama this week, mirroring the turbulent geopolitical landscape far below. Two Boeing 737 MAX 8 jets, destined for Chinese skies, unexpectedly returned to the United States. One, adorned in the vibrant livery of Xiamen Airlines, touched down in Seattle, the heart of Boeing's production. The other, a sibling from Boeing's China Finishing Center, arrived a day later. These seemingly insignificant events, revealed through flight data meticulously tracked by Reuters, cast a long shadow over the aerospace giant, raising unsettling questions about the precarious state of U.S.-China relations and the potential impact on Boeing's upcoming financial results. The air is thick with tension, a palpable mix of anticipation and apprehension as Boeing CEO Kelly Ortberg prepares to unveil the company's first-quarter financial report this Wednesday. Analysts predict a significant surge in sales, a 20% jump to a staggering $19.8 billion, a beacon of hope in the otherwise turbulent waters. Yet this positive forecast is tempered by the stark reality of a projected $466 million loss for the quarter, a lingering reminder of the challenges facing the company. The return of these planes, intended for the burgeoning Chinese market, isn't merely an operational hiccup. It's a potent symbol of the escalating trade war between the U.S. and China. The conflict, ignited by President Trump's sweeping tariffs, has sent shockwaves across global markets, with the aerospace industry feeling the brunt of the impact. U.S.-China trade is at the epicenter of this storm, ensnared by levies reaching as high as 145% on U.S. imports into China and 125% on Chinese goods entering the U.S. These crippling tariffs are not simply numbers on a spreadsheet. They represent a fundamental disruption to global supply chains, threatening the delicate balance of international trade and cooperation. The implications for Boeing are profound and far-reaching. Richard Abulafia, managing director of Aerodynamic Advisory, a leading aerospace consultancy, doesn't mince words, condemning the Trump administration's approach as displaying a profound and hard-earned level of ignorance regarding the intricate workings of the aerospace industry. He warns that prolonged tariffs will inflict lasting damage on Boeing's global operations and standing. This isn't just about Boeing, it's about the broader implications of a trade war gone awry. Beijing's recent warning, signaling potential, resolute and reciprocal countermeasures against any country negotiating with the U.S. at China's expense, underscores the escalating stakes. The conflict is rapidly expanding beyond a bilateral tussle, threatening to ensnare other nations caught in the crosshairs. The delicate balance of global trade is hanging precariously, threatened by the escalating conflict. The diverted planes serve as a stark reminder of the uncertainty and volatility that now defines the global landscape. Investors are grappling with the unpredictable nature of the White House's trade policies. Trump's current stance of raising tariffs on numerous countries after a 90-day pause, excluding China for now following market turmoil that extended to the bond market, creates an environment of profound uncertainty. This ambiguity makes strategic planning nearly impossible for companies like Boeing, forced to navigate a minefield of shifting trade policies and potential retaliatory measures. The return of these planes is not a mere logistical detail. It's a chilling illustration of the escalating tensions between the U.S. and China, underscoring the profound impact of trade policies on global corporations and the fragile nature of international cooperation in the face of political expediency. The coming days will reveal much about Boeing's resilience, its ability to navigate this treacherous storm, and the lasting effects of the trade war on the global aviation industry. The world watches with bated breath as the fate of Boeing, a symbol of American ingenuity and innovation, hangs in the balance. The financial results, while important, are merely one piece of a much larger and more complex puzzle, a puzzle shaped by the ever-shifting sands of global politics and economic uncertainty. The future of Boeing, and indeed, the future of the global aviation industry, remains uncertain, shrouded in the shadow of this escalating trade conflict. The next chapter is yet to be written, and its contents remain elusive, a testament to the unpredictable nature of the global political stage. The question remains, will Boeing soar above the storm, or will it be grounded by the weight of global trade tensions?